Live. Launch and Learn is live. Welcome, 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 welcome. Hello, everyone. Welcome to Launch and Learn with the Lagos Angel Network. My name is Solman. I'm your host, and today we have in the studio and on the program with me two very marvelous guests, and we'll be sharing deep thoughts, insights, and conversations around issues that border on the work that we do as angel investors. If you're new here, the Lagos Angel Network hosts a monthly webinar that caters for issues around angel investing all across Africa. And we usually would invite and host guests from varied countries within the nation Nigeria and across Africa. And our guest speaker today is joining us from out of Namibia. So if you're not too busy eating, hey, I see Garrett. Great to have you here, sir. Thank you so much. So I was explaining that if you're not too busy chewing or biting at something or trying to make something for lunch, I'd have you join us in the conversation. On the program today, we will be discussing portfolio management. It's a very critical part of the angel investors toolkit, the ability to be able to not just deploy capital, but also manage the portfolio post investment and ensuring that everything checks well and the portfolio is healthy and you're better for it. And so it's a lot of conversations with very good people today, and I'm just hosting. My name is Solomon out there on the screen, and I would quickly welcome whose event it is to lead the conversation. Our moderator for the day is a very dynamic, dynamic leader in the ecosystem. Well, I won't just say ecosystem, but in the whole industry, because ecosystem for me feels small. A dynamic leader across the business facets here in Africa. Um, and she's been unveiled already. I know a lot of us have seen her in the advertorials. Napa. Oh no, she corrects me every time and says it's Napa. Good. So Napa Onwusah is a business leader with over 2 decades of working with notable huge companies. She's a diversity champion, angel investor. In fact, a couple of days ago, we're having a conversation, and she was really excited about her portfolio and telling me about, oh, um, I have my eyes on this. I have money in here, and it was really glad. I was really glad, to hear her talk about her investing journey. She's an angel investor of repute. She's an advocate for human welfare, currently the leader for AWS startups in Africa, and has held leadership roles at Google, Visa, Nokia, SAP, SAP, Cisco, and Microsoft. When I first heard and met Napa virtually, it was as the revenue mechanic. And I'm like, who calls themselves revenue mechanic? But ladies and gentlemen, to moderate this session and take us further in the conversation, please join me as I welcome Napa Osa. Yay. Hello.
Hi, Solomon. So excited to be here. Thank you for having me.
You're looking like you're all over the world though. That place where you are is popping in my eyes.
Yes. By faith, I'm in New York in a high rise
Correct.
in Manhattan.
Correct. Great. And joining us for the conversation will be a leader in the space across Africa, somebody that has caught his teeth in angel investing and, of course, early stage investing generally and business leadership across the ecosystem all over Africa. Um, I first read of him, yeah, in the papers, and I was shocked, at the big things they were doing from out of Namibia. And I'm like, who is this person? So I reach out to him and I say, hey, Jess, my name is Solomon. I'm stuck up here in Lagos. I need to meet you. Can we have a chat? And he was really kind. And then we got on talking, and then he told me about the process with which they had achieved what I had seen on the papers that got my attention. And so I'm grateful that he's agreed to join us today to speak about managing portfolio. Ladies and gentlemen, Jesaya Hano-Oshike, I'm sure he's going to teach me how to pronounce the name, serves as the managing director of Bellatrix Investment Managers. And he is the vice chairperson of the Economic Association of Namibia. He serves as an investment principal also at Seed Capital Fund of Namibia, and has experience spanning venture capital, investment advisory, treasury management, and startup development. Beyond his investment work, Josiah is actively involved in supporting the Namibian startup ecosystem and was recognized by the Global Startup Awards Africa as Southern Africa's startup ecosystem hero. He is widely regarded as a leading voice on venture capital entrepreneurship and early stage investing in the region. Without further ado, Jesaya Hano-Oshike. Yay! Great. Fantastic. So, Napa, I'm just going to leave you to Josiah so that you guys can have fun talking about um, angel investing, portfolio management, whilst I'll be in the background trying to make your conversations more enjoyable. Take it away.
All right. Thank you so much, Isaiah. And I'm really excited about the conversation. I hope I don't get into a point where I'm asking questions just for myself. So, looking forward to the people that have decided to join us for Lunch and Learn, contributing and asking their own questions as well. And your profile is amazing. But one of the things I loved is a quote you actually shared. You said, I grew up in a small village where resources were scarce, but dreams were abundant, and that you're a doer and a dreamer. There seems to be kind of a tension between the two. So I don't know if you can share a little bit of about how that tension has kind of translated as you move more into investing.
Yeah, sure. I think for myself, as you said, I grew up in I was born really in a village, but didn't necessarily grow up there. I think until the age of 5 or so I lived, but then I had an opportunity to move to a town when I was around 5 years and such. But I think but those roots it still remain with me today.
Mhm. Yeah.
they produce results. But yeah, but all really comes out of passion. But also, most importantly, also my background is investments in economics, and thought to myself, okay, how do I then use what I studied not only to make big bucks like some of my friends do, but also use that to make an impact as well.
Yeah, so hats off to your mom, really, because us African mothers, we know how to push our kids. So I do want to give her flowers for making sure that the education was there. And I'm so happy you mentioned your economic degree as well as all the study you've done around portfolio management. And for us angel investors, that sometimes is the disconnect because you have the kind of technical expertise. But for an angel investor, how does portfolio management, especially effective portfolio management, look like on a day to day? How do you actually manage that portfolio? And I know you have the theoretical knowledge, but it sounds like you've been able to translate that into a really practical process that you can share with us. I'm just checking if people can hear me because I can't hear Josiah anymore. Okay.
Sorry, here we go. Can you hear me now?
Yes, yes, yes.
Okay, apologies. I don't know what happened there. Okay, so I was just saying, in investments, one talks about two types of investment approaches. One is passive investment approach. Another one is an active investment approach. So passive is basically you invest your money and then you basically just you let it grow, right? And because typically you trust those who have your money. And typically, from an asset management point of view, typically we would invest it into, let's say, some kind of bonds. Apologies for that. I think my colleagues are making a bit of noise. Let me just just ask that they quiet down a bit. Just please give me a minute. Okay, apologies for that. Okay, there we go. So yeah, so basically, and like that passive is basically you invest your money typically in, let's say, in index fund as per se. While if one were to do active investments, typically you would then be involved in the company and such. Or at least track how it's performing and make trades if it's listed. If it's unlisted or venture capital, which it's quite important that one takes a very active role, right? And the same follows then for an angel investor, because at the end of the day, the returns of that particular portfolio, I won't just happen, right? Something needs to happen, right? And that typically you would rely on the founders in that business to kind of participate, and be active and to drive value for you, right? But sometimes, especially the early stage, they might not have the experience, they might not have the expertise or the networks to be able to deliver those returns. That is why, as an investor, as an angel investor, that you then have to get involved to support those the entrepreneurs, the founders, help them build that business. And to me, that's all part of portfolio management. Obviously, there's many other things that are involved. In it, in terms of when one invests, ideally you should, depending now, obviously, if it's also good that you make multiple investments as well and diversify your risk across the board. But also important as an angel investor, if possible, you should definitely also invest in companies that you understand what's going on. So when you get reports, you are not basically being duped. by the companies you're looking to assist and invest into.
Okay, so there are two things you said that were really interesting. I wanted us to double click on. The first one was portfolio diversification, or more like portfolio construction. And in your intro, you didn't mention your Injaba seed fund. It just launched last month, right?
Yes, that's correct. So basically, yeah, as you saw in the beginning, I run a company called Electrics Investment Managers. I guess today I'm representing it is this side. So what we do is we basically finance SMEs and startups. Historically, we've worked on financing with debt capital, doing procurement-based financing, as working capital, and we're running this for about 4 years now, and invest about 30 million USD into these companies. But the unfortunate thing that has been happening, especially in Namibia, Botswana, and smaller markets, is we don't get a lot of venture capital funds that flow to us. But there's many brilliant companies which I personally have dealt with, but because of the limitations of debt, we aren't always able to assist them. So that is now where the Njaba seed fund was then founded out of, to say, look, let's support entrepreneurs in Southern Africa to basically build and grow their businesses. Recognizing that perhaps countries like Namibia as well as Botswana are quite small. But we're also looking at Zambia, might also South Africa. It does get some capital, but even since we launched, I've got quite a lot of interest from South African startups. So we're looking at the whole SADC. So the idea is then to finance between 35 to 50 companies, and given small ticket sizes. Pre-seed we're looking at about between 25,000 USD to 100,000 USD, and then seed funding still not quite big, still between about 100,000 USD to about half a million USD. And then the idea is then to help build them up, and then help perhaps exit to larger VCs, because since I've been in this space, every other month a VC, especially from Europe or the US, is reaching out to look. We're looking for startups, to invest into, but they're looking for ones that are obviously post revenue and also have a good traction, and that is an area which many entrepreneurs, especially when they start out, struggle with, and that's what we want to play in. So yeah, that's just really a bit about the Java Seed Fund.
Yeah, so the Njava seed fund, it sounds like there's going to be quite a bit of diversification or portfolio construction that you'll be looking at to make sure that you, correct me if I'm wrong, look at different types of startups, right? And that's what angel investors sometimes coming in for the first time struggle a bit with. Yes, we know we need to invest in what we understand, but how would you, advise an angel investor that is just at the beginning of their journey to kind of construct their portfolio to make sure that, like you are looking at exits for the fund, they also want to do for their own personal fund? What are your own thoughts around that?
About portfolio diversification.
And
So
construction, and construction. Like,
in
yeah,
construction, okay. No, I think it's quite important. I think, again, maybe if I can perhaps highlight and the work we're doing in Java Seed Fund, and also then bring it to the angel space. I mean, if very much the way the fund is structured towards is more like the type of funds which angel investors were actually supposed to invest within our ecosystems, but because of the risk appetite at times, or maybe a lack of resources, we're not there. So as an angel investor, ideally, when you look at portfolio construction, you should look at start with diversification at the back of your mind. And we talk about diversification, we talk about different types of diversification, right? We talk about diversifications in a number of companies. Ideally, obviously depends on the resources you have, but you should try to do at least more than 10 transactions, because when one looks at perhaps the historical performance, about 50% of those will most likely fail, unfortunately, and that's just the risk that's there. But at least the two or three of them will do relatively well, and most likely will return for you. But that's just. But obviously, the more you do 20, 30, and even bit better your chances of really getting a good return. Then we talk about diversification in terms of sectors. Try to do 5 to 10 sectors, if possible, depending on how many, obviously, how many companies you invest into, especially if you're not necessarily an expert in that sector and you're not able to don't go deep in terms of supporting them, perhaps with with your networks, perhaps and advice, right? Then we also talk about also if possible geographical diversification, and also yeah, so and that's quite important when one invests, because if you don't look into that, you might find that with time, if you're too concentrated within one particular sector, or perhaps only invested in 1 to 2 companies, that you won't get your returns in the long run.
So, would you consider business models as well? Because sometimes you may focus a lot on business to business startups as opposed to business to consumer. Would that be a consideration? And then also check size. What are your thoughts around that? Would you standardize on a specific amount, or do you blend the amount of investment in each of the startups in your portfolio?
Um, yeah, I think that's a good one. I think in terms of diversification in with regards to the business model, I think if possible, you should do that as well. Again, I guess in investments, when we talk about diversification, it's really about reducing risk, right? So perhaps if you're able to do that, that's great. If not, and it's also, I believe it's also fine. I think the most important one is more the sector diversification and anything else, more than necessarily the business model. But if you're also able to do that, then that's great. I see there's a comment here that someone is struggling to hear me. Am I audible to you?
Oh, I can hear you fine.
Okay.
Yeah.
All right.
Lydia, do you mind maybe reconnecting? If anybody else is having issues, just let us know in the
Yeah,
comments.
just
But it decided to me, you are very audible.
okay. I'll continue unless someone else comments. Then yeah.
All right. So, just coming back to one of the comments you made around
Yes.
one of the key roles of angel investors is to support founders, right?
Yes. Yes.
Now,
Yes.
a lot of angel investors sometimes have significant work experience or business experience. And I must admit, we do get overbearing with the founders. So how do we create those boundaries so the founders don't become overtly dependent on your angel investors, and then the angel investor as well doesn't become too operationally aware of what's happening in the startup?
Okay. I think for me, first things first. I mean, if just to avoid those type of situations, it's always good if you invest into a founder who's basically a sector expert or industry expert in terms of what they're doing. So if you find, let's say, and it happens a lot. For instance, I find, okay, someone says, okay, no, I want to start a fintech business, but then you go to this person, okay, do you have experience within basically financial services? No. Do you have experience within, are you a developer? No. I just think it's a good idea, I've read about it. Then I'm like, no, unfortunately I cannot. But obviously if you were to invest into that, especially these days, also AI as well, right? I can write a brilliant pitch deck, put together a brilliant pitch deck just using AI, me using Claude or whatever else, and I come to you and say, okay, cool. But then execution, then how do they do it, right? Then you invest in such a business, you find yourself doing a lot of operational work for them. Perhaps you're an expert there yourself. So that's why it's important that that you want to avoid that. Work with those who are. My rule is either you study the subject, or you have at least about 5 years experience in that particular industry. If not, then it's very difficult for me to work with you, because otherwise then I'll be spending a lot of time trying to help you with that. But again, on the other side, it's also the angel's responsibility to help maybe of some and perhaps there's a market linkage you can make for them. You should do that. I mean, as an example, tonight, for instance, I'm meeting a business out of South Africa that's in Namibia in Windhoek, that's providing wireless hotspots in Joburg. I've invested into a business that does something similar here, so I thought, okay, cool, come along, let's meet this gentleman, and let's see what it's all about, and perhaps we there's a partnership there. That I think is important, and as well as corporate governance assistance as well. I think that's also quite important, from an angel's perspective, because I've found with time that corporate governance is very important. Even for me as a business, for once a business, if I'm just allowed to do what I want to do, and I'll start doing things that are perhaps not, for the best interest of the business, and because perhaps I'm passionate about something, or maybe maybe I'm hiding stuff I shouldn't be, and later on it'll destroy the business. So it's important that there is perhaps a board that can really, support that business, a founder to grow that business and hold them accountable.
Yeah, I love the hard bit of investing in a founder that has subject matter expertise. That's so spot on because it helps a lot. Then, as an angel, like you said, you're able to leverage your network and then your own understanding of corporate governance to support them. And because you have co-founded an incubator, I know you've watched a lot of these companies, close. What would you say are the earliest warning signs? One of my founders has been posting some weird pictures, and I'm not sure if I should be worried, but
Yeah.
I know that's not the thing. But
Mm.
what would you say would be the warning signs that one of your portfolio companies might be in distress?
Yeah, maybe because I'm more of a technical person. Sometimes I don't look out for those, there's a social cues, I should guess. What I would like to,
The eye
but what,
test, what they call
yeah.
it,
So
the eye test.
I test, but what I try to keep in contact with them, at least speak to them once a month. If you obviously you can see the business is regressing, in terms of revenue, and also sometimes, if it becomes personal, sometimes just what I also like to do is just have a personal conversation, because I know being a startup founder is not easy. Then some guys, obviously, you also have pressures from family, you have living expenses you need to meet, and all of this, and sometimes those things become an issue where and affect the way you run the business, because now you start thinking, okay, this is not making enough money for me. I need to do this and that, and it's really then starting to do many other things and not really concentrating necessarily on that business and growing the business. That is a initial area I typically look at, and then obviously I try to be accommodative towards them, understanding, but then again you say, look, fine, you can do maybe X, Y, and Z, but the business needs to take precedence, because at the end of the day, if it works out, all these issues we're having, financial issues, will probably get sorted. Look at the books. I said, very, very important. How does the money get spent? If you have the time, look at the bank statements. Where is the money going to? Is it is it actually getting used for business expenditure, or is it getting used for personal expenditure? And those are really red flags, especially again if you see on the bank statement money is coming in and it's not getting used for intended purposes. Yeah, and then, or again, or revenue is falling, production is falling, and so it goes, and you have to then step in and really have an intervention with that entrepreneur to just to understand what's going on. Yeah, to me, those are the red flags.
Okay, so just telling the audience, please, if you have questions, you can drop a comment. Right? So, Jessica, right, what you're describing almost sounds like a governance model. Am I correct? Um, is it that structured at the investor level? How do you kind of bring it into a structure, especially if there's no board seat that you're sitting on?
Yeah, I think, yeah, maybe something I think I was meant to mention was there should be some kind of framework, perhaps, for dealing with entrepreneurs, because each one is different, but you find there's a lot of commonalities. As long as someone's running a business, certain things must be in place. So I think typically what we do at our angel network is not necessarily we after we facilitate the investments, we don't necessarily get involved, but when an angel does come and ask me for certain advice, that was I always tell them, look, uh, put in place corporate governance structures. I know sometimes you don't have the time, but if possible, make time to sit on the board, meet up with this entrepreneur at least once a quarter, if not at least, and have a call with them if possible once a month, just to find out what's going on in that business, and then ask relevant questions, ask for information as well, and also see how are able to assist, in this business. Obviously, we're all busy ourselves with many different things to do, but if you're investing at this stage, unfortunately, we will need to spend some time within helping that business kind of establish itself as well as well as grow. So yeah, but yeah, they yeah, that, but yeah, corporate governance is very very important in any business of any size.
Yeah. And what you've described almost sounds like a one-to-one framework. And there's a question in the chat, which is just a natural follow-up. How would that work in a syndicate or a network scenario where there are quite a number of investors and we don't want to overwhelm the founder with each person kind of reaching out?
Okay. Again, it goes back to perhaps having maybe an advisory board, right? So you in the syndicate and the network basically know your skills, you know your capabilities. So perhaps discuss and say, fine, look, the 4 or 5 of us will then sit on the advisory board of this particular company, and then we will then be able to provide this advice and guidance for the startup. And then obviously perhaps when the let's say, I don't know, maybe someone's an accountant, or but they not perhaps don't sit on an advisory board, they can always be roped in now and then to say, fine, look, let's help you set up your financial reporting. Maybe another person is an IT guru. Same thing, how do their skills get used there? But not to overwhelm them. The best thing to do is rather have one point person, maybe the chairperson of that advisory board, perhaps, that then deals directly with that entrepreneur, and then the rest of the board members meet up, and then they obviously, the investor will, I mean, the startup founder will then present to them what's going on in the business, and then just for you to keep track and provide the right guidance.
You know, this is in the chat. It's the startups don't like engaging with their advisors. I actually have a case where the founders are amazing. They have, I feel, something that can really go somewhere. But I almost feel like I'm the one chasing them to be able to review with them some of the areas that we could potentially look at. And just from your own viewpoint, because you've engaged with so many founders, what can we learn as angel investors on how to be better advisors to these founders? Because it's very easy to say they're not listening to us, but it could be something that we can do better. So, what would you say would be some of the things that we should keep in mind as we are advising them? Because we've raised something already. They're very, very busy and they're managing a lot of things plus personal issues. From your vantage point, yeah, give us our own feedback.
Yeah, I think for me, we talked about red flags earlier, right? And if a startup founder is not willing to engage with you, and there's no reason for it, then that's a red flag. Then something, I assume something is going on in that business that's not right. Otherwise, they'll be sharing with you. Especially from my experience, startup founders like to share good news all the time. So every time something significant happens, they always they WhatsApp you and they call you, and that.
And
So
Josiah,
so
sometimes the good news is yeah, not really really heavy news, but they love sharing
yes.
news. You're right. Yeah.
Exactly. So where they're not, where they, when you're trying to engage them and they're not, engaging with you, then I always assume the worst case scenario. But how does that? Yeah. So how do we do that then? I think again, it's important that one is structured in the way you do it. And also again, if they're not engaging you, maybe take time to meet them up with just informally, for let's go out for coffee, let's discuss what's going on, and typically the way I do things is first you don't necessarily get to the business, discuss about personal stuff. Oh, there's this, try to connect with them somehow. Then mid conversation you get there, and then typically they are more open than anything else. But one thing I also learn to do is not don't be hostile. Once you're hostile, that they also disengage and they feel threatened, they feel attacked. Really, just again, that's why it's important just to kind of sit them down and understand what's going on. One thing I've learned, we're all human beings. No matter who you are, where you are, you can be the richest man in the world, you can be the poorest man in the world. We all primarily have similar problems in our lives, right? If we can, all of us can be heartbroken. All of us, can be going through good times and bad times. So let's just engage on that level as human beings and understand one another. And then typically, I've found that you get good feedback from them. But again, if they're not willing to engage at all, for me, then unfortunately, you take the next step, and sometimes it's a very unpleasant step, but also important that when you do have when you do into a financing arrangement, have proper agreements in place that take into account all of these scenarios, and then from there you can just take the necessary legal, step.
Nice, nice. I really like the human angle, right? Because the relationship is more than a sex, and that's why we're angels, right? Um, but back to the point of having the difficult conversation. I know you may not remember this, but I think it was 3, 4 years ago, you wrote on LinkedIn that business failure should be celebrated. And you've also spoken about the fact that it's true, like 50, more than 50% of your portfolio might fail. Um, but for a lot of us angels, we want to make sure that we kind of have a return on our investment. So, how do you suggest an angel should approach protecting that long-term portfolio value?
So, okay, yeah, I think the reason, like, if I get to answer your question, yeah, the reason I wrote that is also because perhaps the environment which I am in Namibia, I mean, and things are changing, I should guess, but this huge risk aversion, and where people don't want to get into business, don't want to be entrepreneurs, don't want to invest into entrepreneurs, and when there's a failure, people almost tell you, "Oh, I told you so," right? But then again, we're sitting a huge level of unemployment, and not enough businesses that are creating jobs. So, so we need to create businesses, right? But not every business that gets created will ultimately, succeed. So that is really the context of that. Now, yeah, obviously, as an investor, you don't want any of your business to, of your investments to fail, right? But
Yeah.
unfortunately, it's a fact. If
Yeah,
you
it is
invest in
what it
this,
is.
at least,
Yeah.
sorry?
I said it
Yeah.
is what it is.
It
You
is what
cannot.
it is. Exactly. You're investing at this stage, that's why risk mitigation is very important, right? That is why you'd want to diversify your portfolio. So don't, as they say, don't put all your eggs in one basket. So there's no advice, no nothing I can tell you in terms of, okay, cool, that your business won't fail, but certain things perhaps will protect you. Again, that's why when you invest into a business, invest into founders that know what they're doing. Look for traction as well. I mean, you don't have the appetite to do pre revenue, don't do it. Rather look for traction. And also do your due diligence before investing. And also, ideally, if you can, invest in a business that you personally can support through your networks to gain revenue. So at least if there's some base revenue to keep them to meet their day-to-day operational needs, then they can grow from there. Because even to get business sometimes, many business potential, those who give you business will probably look at your track record, what you've done, what you're currently doing, so they don't partner with someone who's here today, tomorrow they're gone. But yeah, it's a risk you're taking, but the idea is just to diversify your risk in many different ways.
Yeah. And since we are on the topic of portfolio management, Essence actually has a really good question. And Essence, please put in the chat if I capture it correctly. But she is asking, what do you look for when you're hiring somebody to support your thinking around portfolio management, especially given how busy, investors can be and how hands-on portfolio management can be as well.
So are we now talking about startups or staff members which perhaps work with now?
I'm assuming, Essence, you're speaking about an investor having somebody help them manage their portfolio. And correct me if I'm wrong. How do you hire somebody to help you
Okay.
manage your portfolio?
All right. So yeah. So basically, I guess I do work in this space as well, and I do have a few analysts that work with me and such. But I think hiring someone is always, to some extent, a gamble. But what we do is, yeah, especially working for a investment management company. Unfortunately, we have to put you through a few hurdles. Yeah. So typically, where I start out is just, obviously you submit your CV. Then after that, we will then I'll send you a case study to work on, and then you work on it. And then what I look for is really not really necessarily if it's correct or incorrect. It's more, okay, are you in the right direction? In the right direction. how much effort have you actually put in. If when you then I may come make you do a presentation, how confident are you do you actually know what you're doing? Maybe it's a bit off topic, but I don't tell, yeah, we don't always tell people, but sometimes you can see if something was just done on ChatGPT and without any effort, and that is the one you don't even get back to. But on top of that is also when you talk to someone, what passion do they have for these things, because it's also a passion thing at the end of the day. But if someone is just doing this for the sake of getting a salary, then it's not necessarily a perfect fit. And finally, what we typically do is, like, basically give you a 6 to 12 month probation period. And yeah, then after that we will see if we are fit or not. But on top of that, look, it's also my responsibility to teach you and guide you as well in terms of how to do things. And also very important, when instruction is given to how to do something, are you actually following it? Do you remember it, or do you, and all of those things. So it's quite important, and if they do get that, and typically it's quite good. They'll become quite good in assistance in terms of managing the portfolio in the long run.
Okay. I also think sharing with them your investment thesis can also help, and that goes into what you said around training. So it's not just enough to hire, but actually do some knowledge, performance management as well. And in the end, it's your money, so you kind of have to still make the decision, right?
Yeah, yeah. And on top of that, also have structures in place. I mean, again, everyone is different, obviously. But yeah, what we do is also ideally due diligence is very, very important, and have those due diligence, but that sometimes also, if especially if you're a syndicate, as investing, then have an investment committee, right? And then have that person's assisting you, then go ahead and present that case to the investment committee. They'll ask questions, they give recommendations, and sometimes having those multiple eyes on it is quite important.
100%. I think it's one of the things I really appreciate about Lagos Angel Network is the experience in the investment committee. So it gives a lot of confidence when you are looking at the report. So I wanted to go back to Njaba, right? And correct me if I'm wrong, but you mentioned that the target is almost a 4 times return over 10 years. Please correct me if those numbers are incorrect. How are you thinking about exit in terms of that? It's one of the big topics we speak about. What are your thoughts? How are you structuring for that? And what should us angel investors be thinking about as we think about exit?
Okay. Yeah, as I said, yeah, exits are quite important. I think it's also something one needs to think of right from the beginning. And it's, yeah, especially in African context, it's not always easy. So, what where we're looking at, especially for exits, is perhaps maybe three main areas, right? The first one is, the idea is exiting to other VCs. The idea, because we are going to be early stage, right? And we, as I said before, I've had lots of conversations with VCs, especially from outside of Africa, who are looking for opportunities in Africa. But they almost want companies that already de-risks, are post revenue, are operational, and then they can get in, right? But now, so the what we want to do is, again, almost getting that early stage, almost that, similar to almost where an angel will come in and then help clean up that company, put into place corporate governance structures, help them generate revenue, grow fast, and then we're able to exit to them. That's number one. Second one is, the idea is also to perhaps, if possible, grow the business to a stand where the founders of the business, especially the perhaps this basically the top of the cream, probably will go that route, right? Second one will be the ones that, where maybe founders can buy you out, especially if the valuation has increased significantly, but they build a solid business, and obviously if you want to have some liquidity, then we say, fine, look, let's buy me out of this, maybe using dividends or cash flows from the business. And then the third one is also looking out for trade sales. I mean, we have large corporates, as well, in many Namibia, that are always looking to partner with entities, especially when it comes to innovation and growth. Maybe having new revenue streams come in. Those are the three areas we were looking at mainly. I mean, one can also talk about IPOs and whatever else, but I think for our context, that's not necessarily what we're looking at. Given that many of our capital markets are still quite underdeveloped, but who knows? One never knows. But that's really the way we're looking at, when we're looking at exits.
Okay. And when you said who knows, it's not even, it's something we dream about. Everybody dreams about.
Yeah.
I want to be the one that wrote the first check for a company that becomes a unicorn. So, yeah. So, one of the things for us on the continent is market volatility. And in Nigeria, one of the things we do see as a risk is FX. I don't know how much it has really impacted some of the startups you have across the continent as well. But how do we think of that as angel investors when you are trying to do risk management? And some of us do not have degrees in economics, unlike other people that are PhDs. But how do you think we should kind of hedge around managing risk in our portfolio?
Yeah, foreign exchange risk is, yeah, unfortunate. I mean, every market is different, right? So we in Namibia we're quite a small economy, so we are pegged to the rand. So we use the Namibian dollars, but basically just a South African rand. And as of late, especially the last 10 years or so, it has been relatively volatile against the USD. So it's difficult, right? Obviously it depends now where your investors are from. I mean, if you're a Nigerian investor investing in naira, uh, you know, the bigger risk there might be inflation more than foreign exchange risk. But yeah, that's really the thing about it. If you're from outside, how do you think about it? Obviously, if you're investment professional, you can think about certain things such as hedging, and all it goes with derivatives and such. But it becomes very expensive very fast if you do that. So in my honest opinion, it's you might just study the country you're going in and really then invest in hard, sorry, not in hard currency, in that local currency, and really build a business for the future, and then and be able to stick it out during the tough times. That's my honest, answer. Obviously, many, especially non-African investors have different opinions. So I understand that they want to be protected in their own local currency, especially currency, especially the euro in the USD. But we've seen that that doesn't work. As I said, it's very expensive to do if you were to hedge in USD or euros. So yeah, so unfortunately, you just have to accept the risk of the country. But if you believe there's a lot of what you call it, the potential there, then you just go in and build a business for the future, because economies have cycles. So you just need to kind of go with the cycles, and then when there's a better cycle in that economy, then that's where you perhaps will then look to exit.
Yeah, I really like the phrase around build for the future. And TD raises a good point that sometimes angels have the longest wait for exit, which is valid. And then just coming back to portfolio management, quick comments around using portfolio management software, your thoughts. And the second part around portfolio management is which parts are the easiest to delegate and which parts are the hardest. So software, delegation, which ones are the hardest and easiest in portfolio management?
Okay, so in terms of using software, it really depends for me. It's a cost benefit analysis, right? Number one is how big is your portfolio and how often do you then basically invest, right? So if you have a larger portfolio, probably more than 10 companies or so, you perhaps want to invest into a good portfolio management platform. Less than that, you might just want to keep to Excel. But as long as at least you know your numbers. But if you don't know your numbers as well, meaning that how do you do valuations, how do you keep track of certain metrics, and all of that type of stuff, then it's better than maybe even from the onset to get that portfolio management software. But but do your cost benefit analysis. That's really, but because it's quite handy, and such. So it depends also what extent are you using that portfolio management, is also for deal origination, as well as valuation, and financials, and all of those things, and to track certain metrics. If you're doing it across the board like that, perhaps yes, it's good that you get it from the onset. But if not, you're just maybe doing it to keep track of financials, and some information. Just, yeah, maybe you should just use Excel from the beginning. In terms of cost benefit, I mean, what to delegate and what to not to delegate. I've found, from a portfolio management point of view, what you can delegate is, again, things like financials, but also sometimes I'm not an accountant, right? I study economics and investments. I understand the balance sheet and the income statement and all of that type of stuff, but I might know how to do it, but honestly, it's not something I like to do. But at least, but still very important. That needs to get done. If you, as well as, uh, also good to have an external evaluator as well. I mean, it's good that you have, you do it yourself. Have your team capability in your team have capability to do valuations of the portfolio, but also have an external evaluator, because also, if you, let's say, want investors to come in, it's all, especially institutionals, they probably want to have a decent, outsourced, portfolio valuation company that's actually doing it. Um, so yeah, but sometimes what you cannot delegate is really that personal, that follow up with the companies. That cannot be delegated. So you need to be on the ground. You need to understand what's going on within that company, in case things are going wrong, so you're able to take action as soon as possible. And yeah, so I think that's quite important as well. Also, especially from the beginning as well, some due diligence you need to do yourself. Yes, some you can outsource, but much of the due diligence, as far as possible, you should also be able to do that yourself. Again, because at the end of the day, you are the one who's going to be investing this money. But if you depend on third parties for such critical, activities, you might find that, you get the wrong information.
Yes, that's correct. It sounds like underneath everything, there needs to be angel investor ownership, and you're not able to outsource ownership, but look for the areas where you need support. Um, I would, Ray Mester says where Nigerians will have both FX and inflation risk. That is true. Essence, to your question around portfolio support, where we should have boundaries as angel investors, Jesaya actually responded to this earlier on in the live stream just because of time. I hope you don't mind if you go back and listen to the recording, if that's okay, because he did explain, extensively around this. There's a follow-up question around reviewing portfolios or investment opportunities. Is there a peer-to-peer review twist to portfolio management amongst angels?
Yeah, I think, it really depends on the time and capacity of the angels that you have. But if you can, if you can, and you have that kind of capacity and time amongst your angels, it's good that you do your first, review yourself, and then maybe ask, one or two of your fellow angels also to look, especially if there are concerns. So, that might also just unearth some additional information for you.
All right, thank you so much, Jessica. Just the last question before I hand back over to Dr. Solomon King is somebody has $5,000 and they want to make their first ever angel investment this year. If you could hand them a single portfolio rule to protect them from themselves, what would it be?
A portfolio role to protect them from themselves.
Yes.
Interesting. Yeah, that's a difficult one. But I would say perhaps being one person within an investment committee. so they can hear the questions that are being asked, especially if it's an experienced investment committee, and they can on that basis also hear different voices and still confidently make that investment decision if that when if that particular decision is made in the favor of investment, and if it's not, perhaps especially if there's experienced investment professionals there, or at least investors who have done this before, then they can then be protected that way.
Oh, I love that. I love that. Thank you so much. That was super insightful. I learned a lot, Josiah. Loved hearing not only your experience, but also your background, how you're able to be both a dreamer and a doer at the same time. Well done on the amazing work you're doing across the continent. And I look forward to reading more from you online. Thank you so much for your
Thank you,
time.
Napa. Appreciate that. Thank you very much for the great interview, by the way. Yeah.
So this has been terrific. I could listen to you both all day and just have fun. I hope I can be heard,
Yes.
Napa.
Yes, we can hear you clearly.
Oh, great, great. Josiah, thank you for coming through. Thank you so much. Thank you, Napa, for doing way more than I could have even thought of. It was brilliantly orchestrated. Thank you. And I could tell that you had done a lot of work, in getting background information to be able to engage with Josiah. And so you were able to really dig out virtue from him. Thank you both for making this really brilliant. I'd like to say thank you to a whole lot of the angels who have come through, particularly the ones who have engaged with us online. Chuku Some Essence. She's been the questionnaire of the day, if there's anything like that. But so many questions from you, and I'm glad. Raymaster, Lydia, Mr. Ade Boyega, Mr. Adeboyega Kazim, fantastic. Thank you so much. Dr. Adiola. Garrett came in very early, and I'm really grateful for all of our participation. I saw TD when he came into the room, left us a comment. Thank you so much, Tommy Davis, Chidima, and Emmanuel Adeyera. There's quite a lot other people, but I just picked those names to be able to say thank you, thank you, thank you, thank you so much. This has been such a robust conversation. It's the kind of conversation I like that angels should have. And I'm feeling really good about myself today because I brought Napa to do a fantastic job of getting so much value out of Jesiah. And I thank you both for doing justice way more than I could have even thought on this topic. Thank you very much. All right, so last words from you both.
I think I can go before Josiah. I think meeting you has been quite inspirational, just looking at your profile and the work you're doing. But I do want to say a big thank you to LAN. If you're not part of LAN, you should be. You're missing a lot of great opportunities. But I think what I love most about the Lagos Angel Network is the fact that you combine learning, knowledge, and then you push us to actually implement what we've learned. So it's an amazing community and you can be part of it. But Josiah, great, great, great meeting you. Thank you so much for being with us today.
Thank you very
Thank
much.
you so much.
I think from my end, again, thank you very much, Solomon, for inviting me. Looking forward to coming back to Nigeria. Again, I was there last year as part of the Africa Business Angel Network, Congress. It's a beautiful time there. Napa, thank you very much again for the great interview questions. Again, you did some extensive research. I was surprised. Oh wow, okay, you actually did. You did more. As someone say, you did way more than even also expected. Thank you for the questions, and also thank you very much for the audience. Hope you learned one or two things from myself. But yeah, and looking forward to continue just engaging with you all as in the Lagos Angel Network.
Thank you. Thank you. Thank you so much. So we would let Napa and Jesiah go through now whilst we take a word from our sponsors. I know that Mr. Pella from Leot Capital has been on the conversation, is also one of the members of the Lagos Angel Network, and they've made this live stream possible. So we can take Napa, Joseph, if you're on the call, yes, so take Napa, take Josiah out, and let's have Mr. Pella from Leot Capital have a word with us briefly before we take our pitches, the pitches from our dear founders, who's also here to share fantastic opportunities with us. So please bring Mr. Pella up. Hello, sir.
Hello, Solomon. Thank you very much.
Great. So
Nice
we
to
have
be here.
we have the audience of the Lagos Angel Network and the larger investing ecosystem listening in on this call, and we wanted to thank you particularly for supporting the program last month and this month. Thank you so much for always supporting the Lagos Angel Network. I do also understand that you have some words for us about the work that is going on at Leos Capital. So the stage is yours, sir.
Okay, thank you very much. Good afternoon, distinguished members of LAN and also other investors, ladies and gentlemen that are here. My name is Mirage Pella. I'm the Chief Executive Officer of Lyot Capital. Lyot Capital is a private capital firm. Our work is focused on one important question, and that is how do we move capital into real productive assets that solve real problems and generate real cash flow and again create long-term wealth. For us, one of the biggest answers to that question is energy and electric EV infrastructure. I've been a practitioner in the power industry for about 30 years, and so it's something I understand very well. Across Africa, Nigeria in particular, we see businesses spend heavily on diesel the power generation and then energy systems that reduce their margins and limit their growth. But many of them cannot afford the full upfront cost of installing proper energy systems. Of course, these other systems, either through renewable energy, solar or gas, the upfront cost is a lot. Now, that is where Lord Capital comes in. Our model is very simple. We connect capital to bankable energy products or energy projects, right? We structure these projects in such a way that the customers can access, the solution without having to pay the full upfront cost, while investors participate in asset-backed opportunities that are tied to real businesses and real repayment structures. So every time a business replaces expensive, and unreliable energy with a structured solution, either solar or gas to power solution, value is created, operating costs reduce, and productivity improves, right? Assets are also created, cash flows are generated, and investors can participate in that value, in that entire value chain. Now, this is the thinking behind Lyot Capital. Now, businesses that will lead the next phase of African growth, they need power. The investors who understand this reality, they will be the ones who will be part of a very important wealth creation cycle, right? We believe the next wave of African wealth will not come only from technology apps, real estate or financial markets. We believe that a major part of it will come from infrastructure, to be particular, from the systems that power businesses, cities, industries, and everyday life. Everything about the modern society has to do with power. So we invite you to engage with us, ask questions, review our structures, understand our current and upcoming investment opportunities, and explore how you can participate in the next growth of wealth creation in the African space, which is power. Thank you very much, Dr. Solomon, for all your exciting work you do and for the amazing team that works with you. God bless you.
Thank you. Thank you so much. So that has been Mr. Pella from Leo Capital. Maybe for one more time, please, Joseph, can we put up the image that describes their site address? It's not there, but again, a little search online can help us find that. I think it's www.leotcapitalpartners.com. Okay, so with that out of the way, we will then go to the other part of our Launch and Learn every month, where we take opportunities from early stage businesses, startups, and SMEs alike that we want to showcase to our angels and see which of them should join the other businesses in our portfolio. So, without further ado, we will take the first presenter. Joseph, I don't have that list. That's Dara Logistics. Yes. So let's receive Kevin Iyayi from Dara Logistics.
Hello, good afternoon. Yes, good afternoon. My name is Kelvin. It's great to be here. And it's been very insightful so far. And I'll be sharing my screen immediately. Yeah, do help me confirm if you can see my screen. Am I being heard? Oh, great. All right. Good afternoon. And thanks for the opportunity to share what we're building at Dara. So my name is Kelvin Iyayi, and I'm the CEO co-founder of Dara Logistics. Yes, so every year Nigeria loses over $9 billion due to broken cold chains. Farmers lose produce before it reaches the markets. Pharmaceutical products lose efficiency and efficacy in transit. Food distributors, yes, is it fine this way? Yeah, so I said every year Nigeria loses over $9 billion due to broken cold chains. Farmers lose produce before it reaches markets. Pharmaceutical products lose efficiency in transit. And food distributors, they absorb massive losses from spoilage. This is not a logistics problem. It is a food security problem. It is a healthcare problem. And it's also an infrastructure problem. The challenge is simple. Businesses that need refrigerated transportation struggle to find reliable cold chain trucks to monitor temperature conditions and maintain visibility across their supply chains. Today, the industry remains fragmented, which is indeed, and it is manual and it is largely offline. At Dara, we are changing that. We are building Africa's cold chain operating system. So think of Dara as the Uber for refrigerated trucks, combined with the technology layer that powers visibility, that powers compliance and trust across the entire cold chain. We bring together three critical components: cold chain infrastructure, technology, and mobility. Through our platform, through our Dara platform, businesses can book refrigerated trucks on demand. They can monitor their shipments in real time. They can track temperature integrity throughout delivery and assess complete operational visibility from pickup to destination. Our platform provides live GPS tracking, temperature monitoring, fleet telematics, and digital trip audit trails, enabling businesses to know exactly where their products are and where they remain and if they remain within temperature, the ideal temperature ranges. We are not just helping companies to move products. We are helping them protect value, protect their revenue, reduce waste, and ensure quality. What excites us most especially at Dara is that the market is already demanding our solution heavily. The pharmaceutical industry requires cold chain compliance. Food manufacturers depend on temperature controlled distribution. Agricultural producers need reliable transportation to produce and reduce post harvest losses. We are not creating demand. We are digitizing an existing rapidly growing market, and our traction reflects that. In 2026, we've grown from a growth from 25 million to now between 45 million to 50 million month-on-month revenue from our direct logistics and partner networks. We also have a number of anchor clients like New Rest and Integrated Diaries. New Rest is a French-German global brand in the process of in the business of and providing in-flight catering services for airlines across the country. We work with Lufthansa, work with Air France, they work with British Airways in for their in-flight catering. So all the food that these airline companies eat while in transit, New Rest take care of them, and Dara is directly responsible for these operations on a monthly retainer basis. Okay. Let me hurry up then. So in just 120 days, Dara has achieved three times growth with a projected annualized GMB of over a projected revenue of 624 million by May 2027, while maintaining positive unit economics. So this validates that customers are willing to pay for our solution that solves critical operational problems. The opportunity ahead is massive. Africa's cold chain logistics market is projected to exceed 18 billion by 2030. We believe the next generation of logistic leaders in Africa will not be built by owning every truck. They'll be built by owning the network, by owning the data and the operating system that powers the movement of temperature sensitive goods. That is our vision to become the digital infrastructure layer powering cold chain logistics across Africa, starting in Nigeria and expanding across the continent. So we are raising 500K we are raising 500K. Yes, so our team combines our $3 million valuation. Our team combines deep experience across technology, logistics, operations, and supply chain management, giving us the unique ability to solve digital and operational challenges in this industry. At Dara,
If we don't stop you now, there are two other startups that would still need to
well,
speak to us. So, and we have just 15 minutes for the program to be
oh,
out. But we like
okay,
what you're building. More reason why we brought you to speak with the angels. We will be in touch. There's going to be a more extensive meeting where you can then have opportunity to share your thoughts and answer a lot of questions. But we wanted the angels to have an idea of what you're building, and then we'll meet you at a subsequent meeting. We call that a deep dive, and at the deep dive, we will take some more of Dara Logistics. Well
all
done,
right,
and then keep building. Speak to
all
you
right.
soon.
Thank you.
Awesome. Um, Joseph, you take him off. Fantastic. And then let's get the good people from. Is that Justice Shaw of Control? Who's coming up next, Joseph? That's Justice Shaw, right?
Yes, controlled by Justice Show.
All right, brother. You have 5 minutes. Use it well.
Good. Thanks. I'm sharing my screen. Is it okay? Cool. All right, great. It's really exciting to be here. We are Control from Justice Show. Basically, what we are trying to do is to build the operational compliance engine that powers SMEs across Nigeria and Africa. Right. So we are trying to build the business operating system for SMEs that where cash flow and compliance are running in one single loop instead of having them into disconnected platform. So my name is David. I'm the CEO and the co-founder of Justice Show, and we are actually building Control, which is one of our products under Justice Show. I have a background in consulting at McKinsey, among other things. And over the years, I've had experience building, operating, and supporting businesses. And so I've seen firsthand how fragmented operations, weak visibility, as well as very poor accountability can repeatedly destroy businesses and then prevent them from expansion and growth. And so, what we are trying to do at Justice Show is to build a tool that is going to allow SMEs across Nigeria and across Africa to also structure their businesses end to end. So what we've seen is that most African SMEs are operationally blind, right? So sales will happen and then you see money exchange hand, but the owner of the business have no visibility about what is happening. If someone steals from them, they don't know. You ask an SME person somewhere in an open market, in Ochanja market or in Lagos, and say, how much worth of goods do you have in your shop? They can't tell you. So operationally, they are blind. And what that then means is that you begin to see revenue leakages and fraud that you can't trace or even determine where it's coming from. You have tax exposure as well as this whole operational chaos, right? And when you have that kind of operational chaos, you cannot build a successful business that can expand. And that is where we kind of come in because this particular problem have created a very huge opportunity. There are more than 39 million SMEs across Nigeria alone, right? And just less than 5% of them have digital tools that they use to manage their business operation. So you have about 35 million that we need to support. That's a huge market that have created about $5 billion worth of opportunity, which we are trying to then invest in, kind of tap into. So existing competitors now, they typically just build for large corporation. Whatever they build is not for SMEs. And they start from accounting, not from operation. And so we ourselves, we start from operation by helping SMEs get paid, manage their expense. And so that record, that transactional record that comes from that, begin to power the infrastructure we are building through the automation for tax, for accounting, and then for compliance and the rest of it. So we believe that once we win the operation first, compliance actually follows. Because one of the things we want to do is to allow these SMEs to be compliant. As investors, you will never invest in any business that is not compliant. So compliance is very, very important in business operation. But what we've then seen is that we can't enter through compliance because SMEs do not buy compliance first. They buy control over their money. And so we are building that operational infrastructure that then help them collect their money, manage their expense, have visibility on what they are selling. And then over time, that transactional data begin to flow into the compliance pipeline that we have actually built for them. So we've already started seeing how the market is responding to our products, right? We just launched in April. At this point already, we are growing about 400 percent month on month revenue. We've already onboarded more than 32 business location across Abuja and Lagos. And this is just founder led onboarding, right? We don't have any team that kind of support what we are doing. So the market is already responding to that. In terms of the core team, myself, Anita, my co-founder, we have a combined 22 year of experience building, operating, and supporting SMEs both in Africa and on the global stage. So that experience is what has kind of positioned us well to understand the problem we are trying to solve and then work with SMEs to make sure that we kind of help them with this. So we believe that the system that wins in Africa in future is going to be those systems that are able to bridge cash flow and compliance to create transparency, to create trust within the system, as well as structure. And that is exactly what we are trying to build at Justice for Using Control. And so we welcome you guys joining us. We are raising 1 million because we have a whole lot of infrastructure layer that we need to build for auditors, for legal guys who support SMEs, and then for the core infrastructure that the SMEs are going to be using. So we are asking for $1 million at a 5 million valuation at this point. So we'll be happy to engage with anybody who is interested in actually building the next phase of infrastructure that powers SMEs across Nigeria and Africa. Thank you.
Great, great. Thank you for coming through. I'm sure the angels have taken note. We would invite you to the next phase of this conversation at our deep dive, and then you can take all the questions and answer, and probably then get one or two people to write you good checks and bite part of the $1 million. But in the meantime, keep building. Well done on what you're doing. We know that building in Nigeria and out of Africa is tough work. And so we appreciate and celebrate you, and we're cheering you on. Well done. All right. Finally, today we will take the third pitch, and it will be the last one. And these pitches, you already have their decks, they're angels. So spend some time to look at them. Also, spend some time to look at the reports from the existing portfolio businesses that we send to you. Ask questions, engage us at the Secretariat so that we are able to serve you better. I'll come back for some more of that around portfolio management, which was the essence of this whole conversation. But before then, let's take the good people from Adder Business School. I don't know how that word is pronounced, but they'll teach me when they come. Dami, I'm hoping that I get lessons in how your business is pronounced. Adre, Ade, whatever that is. We can hear you. It'll be good to see you though. So you could quickly, but can you share your screen? Maybe that then can be share your screen and see if that works. If that works, then we can pardon you. Joseph. Okay, so we can see. Take me out of the screen. Take me out of the screen.
I can control it from here.
Okay, so take.
Can you see me now? Okay. Good afternoon, everyone. My name is Dami Oguntunde, the CEO and co-founder at Hardy Business School. It's been a very great time here so far. I've learned a lot from all the insights shared by the investors that spoke earlier. And so, what is Hardy Business School? By the way, Hardy means herd. It's French for herd, like a pack of innovative folks moving into the future with resilience and tenacity. Now, what do we do at Hardy Business School? We are a modern business school bridging the gap between tertiary education and workplace readiness through industry aligned executive education. And we do that through a very gamified, practical, relevant, and industry aligned type of learning that is structured in a way that improves learning outcomes and proficiency for pretty much everyone who we are targeting, from the entry level all the way to senior level executives. Like we all are aware of, Africa adds about 15 to 20 million young professionals to the workforce annually, but employers report critical skills shortage. A couple of months ago, there was a trend here in Nigeria where the CEO and founder of MoneyPoint, spoke at the platform and talked about how that there were 500 open vacancies at MoneyPoint, and it had been open for quite a while, yet it was not being filled because there were very few people who were able to compete at the level that they had expectations for, especially from the Nigerian pool. And that is evidenced by some of the statistics that is available. 65% of C-suite executives say that skill gaps hamper innovation. It's 7% of HR struggle to find skilled talent. Entrepreneurs
need reskilling to meet growth targets. And this is a major problem across the entire value chain of professionals, from entry level to mid to senior level executives, and then to senior level executives, entrepreneurs, and founders. So executive education was outdated, inaccessible, and misaligned with industry relevant thought leadership and application. So it's not unusual to find a bunch of people get churned into the workforce every single year by the universities and polytechnics and colleges of education. But many of these people still need a lot of reskilling, retraining. I'm sure we're all aware also of the banks and their training programs, just to ensure that the graduates that they're about to hire are adapted effectively to the banking culture and the realities and the requirements of that work environment. And all of that is speaking to the deficiency within the educational structure, especially at the tertiary education level. And so these are the challenges that Hardy Business School seeks to bridge, right? And that's across the entire value chain, from entry level to senior level executives. Now, we do this with some of the most gamified learning ecosystem that you can find on any LMS. So our learning management system is custom built, and it's designed to improve learning outcomes with very strong interactivities, gamifications, and engagements that improve learning outcomes. For example, learning outcomes and completion rates. For example, the average learning outcome across MOOCs generally is less than 10%, but on our platform, for the micro courses and the self-paced courses, it's about 30%. And for the core-based courses, it's significantly improved to about sometimes even 90% in terms of the core-based program. So we have a number of programs for entry level, mid level, and senior level executives, and we harmonize the delivery methodology to have both the online learning and then the virtual webinars, as well as physical dimensions to all of these trainings, which improve the quality of the experience, evidenced by some of the feedbacks that we get. Now, the problem is a massive problem. We're talking about a total addressable market size of about 17 billion across Africa in terms of the executive education landscape generally, and then a serviceable obtainable market of $34 million. And so this is a huge possibility. This is a huge potential within the African landscape. And this is something we've begun to see significant results, especially within the last 24 months. In the last 24 months, we've been able to train over 300 executives who are willing to pay as high as 500,000 naira, to be trained across 10 critical skill areas. So we broke the major flagship product, that's the BLEP program, Business Leadership Executive Program, into 3 modules: people management, product innovation, and then business management. And in the last 24 months, or less than 24 months, we've been able to generate over 100 million naira, from that particular program. And there's not a single person that has been part of that program who has come back to say this was too much of an expense. As a matter of fact, many people have come back to say that we didn't quite price them hard enough because of the quality of value. So we leverage the experience of some of the smartest people in the industry, the likes of Abubakar Suleiman, DDK, across various industries who are experts in their fields, to train each of these executives in these knowledge areas. So under people management, you have emotional intelligence, personal effectiveness, effective communication, and public speaking. My time is running. Okay, that's fine. So within the last 2 years, like I mentioned earlier, between 2024 and 2025, we saw a 300% compound annual growth rate. And when we project that across the next few years, we're seeing a potential of revenue of over $2 million. Our competitor analysis is pretty strong in terms of all of these relevant metrics. All right. Then the traction, I already mentioned some of them: 90% satisfaction rate, 90 million revenue till date, campus ambassadors, and the likes. Thankfully, you have the slides. Well, because of my time, I'll go straight to the funding goal. We have a funding goal of $1 million with a valuation of about $6 million. Now, the reason why we need that fund at this point is so that we can create an open university type of model that can backwardly integrate and ensure that from the tertiary institution level, we already integrate some of these relevant industry aligned knowledge areas into the tertiary education itself. And in order to secure the NUC license or NPTE license, which is very capital intensive, there is a need to significantly push some good funds in that regard. We already have the list of requirements from the NUC and NBTE, and all that is required is the funding target as it stands. And so that's where we are at, and we'll be excited to hear from any of the investors with respect to their interest in investment. Thank you very much.
Thank you very much, Dami of Hadi. Again, I'm going to need to go through executive education to learn how to pronounce that word. But well
It's
done,
okay.
well done on the
Thank
work
you.
that is being done. I like Hadi. I've used way back 2022 when you
Oh,
first
nice.
started out. Yeah, I'd taken a few courses. And so when I saw the deck come through, I'd be like, oh, Hadi is raising. It'd be good to then engage and see how the angels at the Lagos Angel Network can be a part of the good work you already are doing. So we would,
Thank you.
like I mentioned to the other gentleman, invite you to the deep dive session, which allows us to then engage further and ask relevant questions and see how we can be a part of what you are building. In the meantime, well done and keep going.
Thank you so much.
All right. So, dear angels, thank you for making today's Lunch and Learn such a phenomenal session. I've had so much fun listening in on different angles of the conversation. And I just want to quickly reiterate certain elements that we had mentioned today. Angel investing is contact sport. It is a contact sport, and it is one that requires you to not just dump capital and go home to bed. You've got to pay attention to your portfolio. And in doing that, you've got to be strategic. Um, Jesaya mentioned diversification across portfolio, across size, which means that you should have more than at least 10 businesses in your portfolio so that you can get the portfolio theory to work for you. Do that across industries, do that across geographies as best as you can. And then please take advantage of the good work that we're doing at the Lagos Angel Network. We do a lot of due diligence to ensure that the better deals come to you. When you get the reports, we usually will try to send that out as often as possible. Please study them. Please ask questions. The more questions you ask us, the better we will be at about providing necessary information and support for you. More importantly, the startups need you. You are an angel because you are an angel, which means that you're supposed to provide that support, that guidance, and follow on capital is a big part of being an angel investor. So let's consider all these elements as we go on our angel investing journey. I thank you so much for the support that you have given to us and to the startups that we support. I thank you very much for taking out funds that you don't have so much of, and put it in support of businesses, ideas, and entrepreneurship across the ecosystem. We're very grateful. And so that you reap some benefits in return, we expect you to also still do give some more in time, in mental assets, in access to markets, in access to relationships, in access to skills that these people lack. So follow on in terms of cash and non-cash equivalents are very important for the health of your portfolio. Enough said, just needed to reiterate what has been said extensively today. I'd like to thank the leadership of LAN, from the board to the executive team that works with me. And of course, Napa and Jesaya did amazing work. I'd like to thank also our sponsors today, Leod Capital, and to every single angel who continues to engage both financially and in physical and moral engagements. Thank you all for the work that we do at Lagos Angel Network. I'll be on your phones as usual, and the conversations will continue. But till then, let's have a fantastic rest of the day. Signing out.